Hello everyone, I am Pratap here. We are at lesson 3 examples video. It is about components of a zone. If this is your first visit to our channel, please note we are providing complete free training on supply demand zone price action. And all the training lessons are already available at our NeoStock YouTube channel. To access all the training lessons, at our channel homepage, click on the tab Playlist. I'm clicking on the tab. Here you have two important playlists. One is examples related to supply demand zone price action course. And we have the most important playlist, supply demand zone price action course. And this playlist is having all the training lessons. Now each training lessons, the examples related to commodities, Forex, crypto, indices, we are providing in this examples videos. Okay, now let me open the supply demand zone price action course playlist. You just click on view full playlist. Now we are into supply demand zone price action course. Here you have all the training lessons are available. You need to start our training from lesson 1.1 that is available at the bottom of the page. And in this video, I am providing examples to the lesson 3. It is an important video. This is about the components of a zone. And I request you complete this lesson 3 and then only you enter into the examples video. If you did not complete the earlier lessons, first you complete all the earlier lessons and their examples in the examples playlist. Once you complete lesson 3, then you get into the lesson 3 examples component of a zone. And before we get into the examples, let me quickly summarize what you learned in lesson 3. In lesson 3, we learned about finding the demand zone and supply zone. And either demand zone or supply zone, they have three important components. One is the leg in, another one is the base, and the third component is leg out. Same is the case for supply zone also. Leg in, base, and leg out. But in both these demand and supply zones, you see a difference at the leg out. Even before that, leg in, what we learned, for both demand and supply zones, the leg in could be any medium size leg candle or it could be any large size leg candle. Only leg candle should be used as a leg in. That is what you learned. And then base candles. In both demand and supply zones, a base candle could be a small, either it could be a small candle, narrow range candle, or it could be a medium size base candle. That is also a narrow range candle. So that means in either demand zone or supply zone, a base contains small candles, combination of small candles and medium size base candles. And demand and supply zones are also having a leg out component. But the difference is both the large leg candle should be there, but the difference is the leg candle, the leg out leg candle could be a rally candle, a large rally candle. And similarly, for supply zone, it should be a large leg out candle, that should be a large drop candle. In the previous videos, you learned what is a rally candle, what is a drop candle. You can be having a medium size rally candles also. But leg out, you have to use only a large rally candle for demand zone. Similarly, for leg out, a large drop candle you have to use. So this is what you learned in lesson 3. I already gave a detailed explanation. So if you would have completed the lesson 3, now let's focus on the lesson 3 examples in different charts related to crypto, commodities, Forex, and some other indices, international indices also we will use along with Indian indices, Nifty and Bank Nifty. So in any chart, you will be finding these three components for identifying demand and supply zones. First, let's start with Bitcoin. This is a Bitcoin chart. So Bitcoin, did you notice here? You have a large candle, you have another large candle, in between you have base candles. Base candles could be either a small candle or medium sized candles whose body should be less than or equals to 50%. That is what we discussed in detail in the previous examples videos also. And a zone should be formed. It should have a leg in. It could be a medium sized candle or it could be a large candle. So clearly this is a large candle. So large candle also can be used as a leg in. After leg in, base candle should be available. Here we have 3 base candles, or we can say, strictly speaking, 4 base candles. After that we have a drop candle. This is a large candle. Some of you may say, this leg in large candle is larger than this leg out candle. Please remember, there is no difference between leg in and leg out candles. There is no rule that leg out should be more than leg in. There is no rule. That is a wrong rule. The reason why I am mentioning on this point, previously, some of the members asked me about this question. So that's why, well in advance, before you ask the question, I am clearly explaining. There is no comparison between leg in and leg out. Leg out should be a large candle. There is no rule that it should be larger than leg in. There is no rule. Then what about leg in? Leg in could be a medium size leg candle or it could be a large size leg candle. But after that, base candle should be there. After the base candles, again a leg out large candle should be there. And what kind of leg out it is? It is a drop leg out. Drop leg out means that indicates a supply zone. That means this is a supply zone. How do you draw the supply zone? In between the base candles. We have 4 base candles are there. So that way you can draw a supply zone here. So this is the supply zone. What a supply zone contains? Institutional pending sell orders, and those pending sell orders might be having the capability to push the prices down next time when prices are entering into that zone. See, a supply zone is created after this drop candle. After that again prices entered, and once again it pushed the market down. Similarly, you can draw a demand zone also. How you can draw a demand zone? You see here, you have a medium size leg candle. And here you have base candles. Small candle, by default it is a base candle. These 3 are medium size candles, but their body is less than or equals to 50%. Probably this candle is having a body around 75%. So we considered this medium size candle as a leg candle. So what is the pattern? Leg candle should be there. After that, base candle should be there. After that, leg out candle could be a rally candle or it could be a drop candle. If it is a rally candle, it is a demand zone. If it is a drop candle, it is a supply zone. But the candle should be a large candle. So definitely this is a large candle compared to these medium size candles. Now we can draw a demand zone here. Okay. Did you notice here? Prices entered into the zone and again moved up. Once again it came almost close to the end of the zone and again it pushed the prices up. So demand zone is having institutional pending buy orders. And these buy orders might be having the capability to push the prices up. But what is that we noticed? In any demand zone or supply zone, three important components will be there. One is a leg in, and another one base candles, and third one leg out. If the leg out is a rally candle, it is a demand zone, and if the leg out is a drop candle, it is a supply zone. Now we have drawn here a demand zone and here a supply zone. So this is what we have drawn in the Bitcoin chart. Same thing you can draw in any kind of chart. Next we will look into commodity charts, gold. Did you notice gold is at all-time high? All-time high, we can't draw the supply zones. Because it is at the high of the market, obviously there won't be any supply zones. But demand zones might be available. See, here we have a large leg-in candle, then we have a base candle, and then we have a rally candle as a leg out. This is the leg-in, this is the base, and this is the rally. And a base should have a minimum one candle. Those rules we will learn in the upcoming lessons. Now at this point of time, we are only finding the components of a zone. A zone should have a leg-in. It could be a medium-sized candle or it could be a large candle. See, this is a large candle. Then we have a base candle. One or more base candle should be available. One candle minimum is there. And then we have a rally candle, leg out. Leg out rally means it is a demand zone. So let us draw the zone now. This is the demand zone. This is the gold. Recently, what happened? Prices entered into this demand zone. What a demand zone contains? Institutional pending buy orders. And these pending buy orders might be having the capability to push the prices up. That is what happened in gold. The moment prices entered, it gave you a very good buy signal. And here, if you would have brought the gold, you would have got a very good profit. Similarly, let us look into one more commodity, that is silver. XAZ USD is the silver. This is the international market. This is a spot market, 24 hours a spot market. Okay, here we have seen a large candle and another large candle. Here a medium sized candle. This first large candle is a leg-in. Next medium size candle having body less than 50% is a base candle. So here we have a base. And then again we have a large candle, but this large candle is a rally candle. That indicates this is the leg out candle and this is the demand zone. Now we can draw a demand zone here. And recently prices entered into the demand zone. After the demand zone creation, prices entered here. A demand zone is having institutional pending buy orders. These pending buy orders might be having the capability to push the prices up. That way, the silver has given a very good profit. It would have given you a very good profit. And at present, silver is at all-time high. At all-time high, you won't be having any supply zones. Always remember, all-time low, if price is all-time low, we won't be having any demand zones. Similarly, if the price is at all-time high, this is the example, all-time high example. At all-time high, you may not be having at any supply zones. But before reaching the all-time high, here we have a supply zone. let me hide these candles for some time. See here we have a large candle as a leg-in. You have 3 base candles, medium size leg candles. But body is less than 50%. So we have 3 base candles. And then we have a large candle. But this is a drop candle. Because it is a drop candle, it is a supply zone. Now let us draw a zone here. Okay. Recently, what happened? Prices entered here into the supply zone. See, before that, this is a leg-in. This large candle is the leg-in. You have 3 base candles, and this large candle is the leg-out. All the 3 components should satisfy. Then only we can call that as a zone. If leg-in is not there, you can't say it is a zone. Leg-in must be there. But only rule is the leg-in should be a medium size leg candle or a large size leg candle. That's it. What kind of leg? Is it rally or is it drop? We don't have any rules. So it can be anything. But a leg-in candle should not be base candle. But the leg-in could be a medium size leg-in or it could be a large size leg-in. Either one is valid. So we have a leg-in. And then we should have a base candles. Minimum 1 base candle should be there. Here we have 3 base candles. After that, a leg out should be there. See, here we have a leg out. And a leg out could be a large candle. So this is a large candle. And it could be a rally candle or drop candle. But if it is a drop candle, it is a supply zone. If it is a rally candle, it could be a demand zone. Because it is the drop candle, we confirmed this is a supply zone. Supply zone is having institutional pending sell orders. These pending sell orders might be pushing the prices down. That is what happened. See, prices entered, immediately it pushed the prices down. And after that, again, what institutions did? They created a demand zone, rally, base, rally. A new order flows and new orders, and now this time, this entire order flow is violated this supply zone, and then prices further moved up and reached the all-time high. Why it is violated? What are the reasons? Though you will be learning in the upcoming sessions. But in this session, our goal is just to mark demand and supply zones. And now this is no more valid because prices went beyond that supply zone. It is no more valid. So I am deleting this. And this is the only demand zone is available. And this demand zone, it picked up the orders and then again prices moved up. Here you may ask a question. See, again here we have a rally candle. You have base candles and then again a rally candle. Can we draw one more zone? Yes, you can draw. There is a concept called a level on the top of the level concept. If 2 demand zones overlap, that you will be learning in the upcoming lessons. I don't want to create any confusion at this stage. So my example should be very simple and you should learn leg in, base and leg out. That's it. That's why I'm not entering into the other concepts. The other concepts, examples we discuss once we get into that related chapter. Hope I made it very clear. Okay, this is the silver chart. How beautifully it prices entered and these orders, pending orders, pushed the market up. That way, huge profits you would have got in silver. Okay, next one more commodity we will see, crude oil. This is also international market, 24 hours market. That is US oil spot price. That is the symbol, US oil spot. Okay, if you look into this chart, here you can identify a large candle here. This could be the leg-in, and this is the base candle and a rally candle. That way you can draw a zone. This is the demand zone. Why demand zone? We have a leg-in, we have a base, and then we have a rally candle, large candle. Almost this candle and this candle size is almost similar, but small, a little small. But okay, this is a large candle. We have a base candle and we have a rally candle. And this is the demand zone because the leg out is a rally candle, it is a demand zone. See, recently price has just entered, picked up, and then started moving up. And here you have a supply zone. Why supply zone? You have a drop candle, base candles before you have a leg-in. See, leg-in is a large candle. It can be a large candle or medium size candle. So large candles also can be used as a leg-in. After that, base candle should be there, minimum one, but here we have two base candles. And then you have a drop candle. Is it good enough to draw a zone? Yes, we have a leg-in, we have a base candles, we have a leg out candle. So we can draw a zone here. A supply zone. And this supply zone might be having institutional pending sell orders. This demand zone is having institutional pending buy orders. Okay, next we will look into Forex charts. This is a Euro and USD. This is the symbol, Euro and USD. If you notice here, see here you have a very large candle. After that base, two base candles. Again a large candle. See, this is the leg-in. This is the base candles. And this is the leg out. You may say this leg out is smaller than leg in. That is okay. There is no rule that leg out should be greater than leg in. There is no such kind of rule. Leg out could be either smaller than the leg in candle or larger than the leg out candle, or even equal to the leg in candle. Either combination is allowed, all are allowed. But only rule is leg in could be either medium size candle or large candle. Either one is allowed. But leg out should be a large candle. It should not be a medium size candle. Definitely this is not a medium size candle. It is a large candle. See, these are the medium size candles. But their body is less than 50%. That's why they are the base candles. If body is more than 50% or 75%, then they would be qualified as a leg-in. Leg candles. But these are the base candles because body is less than 50%. So here we have a leg-in, two base candles, and then we have a leg-out candle. Now you can draw a zone here. So this is the demand zone. Why demand zone? Because the leg out is a rally candle, large rally candle. So that's why this is a demand zone. Similarly here you see, you have a large candle as a leg in, you have three base candles, and then you have a drop candle as a leg out. So we have a leg in, we have base candles, we have leg out candle. Now you can draw a zone. Okay. So this is the leg in, these three are base candles, and this is the leg out. But leg out is a drop candle. So this is the supply zone. Now we have a demand zone. We have a supply zone. Demand zone is pushing the prices up, and supply zone is pushing the prices down. And multiple times this is happening. Sometimes it will happen like this. Sometimes prices may struck up between demand and supply zones for several days. Sometimes. So this is a US dollar and a euro. This is a currency pair, Forex chart. Let us look into another currency pair, that is a Great Britain pound and US dollars. British pound and US dollars. See here we have a leg in, two base candles and a large candle, follow-up candles. But okay, leg out is there. So that way you can draw a zone here. Sorry. So here recently just price entered into the zone, and then again the pending orders in this demand zone pushed the prices up. We have a leg in, we have base, and then we have leg out candle. And similarly here we can draw the, see this is a large candle. A large candle is a but failed ERC candle. Failed ERC candles also can be used as a leg in. But leg out failed ERC is not allowed except some special scenarios. Those scenarios we will learn in the advanced training sessions, not now. But at least a large candle can be used as a leg in, but failed ERC candle. So that means one point you learn here, failed ERC candles can be used as a leg in candles. But leg out restrictions are there. Let us don't get into that area at this point of time. So because we have a leg in, you have two base candles, and then you have a drop candle as a leg out. So you can draw a supply zone here. So this is the supply zone. See, the supply zone again pushed the prices down. Twice it pushed the prices down. Now it entered into the demand. Now the demand zone again pushing the prices up. So these are the opportunities given in the Forex market in pound and US dollar currency pair chart. Let us look into one more currency pair, that is US dollar and Japanese pound. Sorry, Japanese yen. Okay, look here. Here we have a leg in, a large candle as a leg in. You have three base candles, and then you have again a large candle as a rally candle. Here you can draw a zone. And this is a demand zone. Why demand zone? Because this leg out is a rally candle. We have a leg in, we have three base candles, and we have a large candle as a leg out, but a rally candle. So it is a demand zone. This zone is having institutional pending buy orders, and they are pushing the prices up. It would have given you a very big profit here. Again prices came down. Once again moved up, but this time the move is not very great. Again moved up. And recently prices once again entered and they are moving up. And similarly here you see, here you have a large candle as a leg-in. You have, maybe it could be a medium size candle as a leg-in. These three medium size candles having body less than 50%. So these are the base candles. And then we have a large candle. But this is a leg out candle as a drop. Drop means supply zone. So we can draw a zone like here. See what happened? Prices entered and again it pushed and gave a profit. But this time, this zone is violated. But before that, it gave you one opportunity. If anybody looked for second opportunity, your trade would have been stopped out. You would have got stop loss. How to find stop loss? You will be learning in lesson 5. You will be learning. Now our goal is just to focus only finding the leg in, finding the base candles and finding the leg out in this video. And this demand zone has provided you multiple opportunities, trading opportunities. And this is a USD and Indian rupees. Here you see, you have a medium size candle as a leg in. You have two medium size base candles because the body is less than 50%, and here you have a small candle. Small candle by default is a base candle. So total 3 base candles we have. Now we can draw a demand zone here. Demand zone is created and 3 days back price just entered and the pending orders here it pushed, and after that see how prices are moving up. And this is at the all-time high. All-time high is generally can be used as a target that you will be learning later. Just I want to tell you, after it gave an entry, it reached the target. Because it's too early to discuss the trade related concepts, because our focus should be only on learning the components of a zone. But sometimes showing these kind of levels like it reached the target might increase our confidence level while learning the concepts. But otherwise, this is not the right place to discuss the trades. So this is the demand zone. Why it is demand zone? We have a leg in, we have 3 base candles, and we have a large candle as a leg out, which is a rally candle. That's why it is a demand zone. Leg out is the rally, is a demand zone. See how nicely supply demand zone concepts are working in a Forex market. We have seen they worked in crypto market. We have seen they worked in commodity market. We have seen they are working in Forex market. Now let us look into some indices. And this is a NASDAQ. NASDAQ in the recent chart, you see, here this is a large candle but failed ERC candle. Failed ERC candle can be used as a leg in. So this is the leg in, and this we have one base candle, medium size candle, whose body is less than 50%. And then we have a large candle as a leg out. But what kind of a large candle it is? A rally candle. Rally candle as a leg out indicates a demand zone. So here we have a demand zone. Okay. So recently prices entered here. If anybody would have got a trade and got an entry, and this pending orders in this demand zone again pushed the prices up. Until where it pushed the prices? Until the supply zone. Where is the supply zone here? See, here we have a large candle as a leg in. You have 1, 2, 3, 4 base candles, and then you have a drop candle. Sorry. So that means from demand zone, prices reach to the supply zone. Why it is supply zone? Because we have a large candle as a leg in. You have 1, 2, 3, 4 base candles, and then we have a drop candle. Large drop candle as a leg out. Because it is a drop candle, it is a supply zone. And earlier this demand zone gave an entry, and again it pushed the prices up. But before that, prices entered into this supply zone. This supply zone pushed the prices down until the demand zone. Now demand zone again pushed the prices up until the supply zone. You would have got a very good trade opportunity here. This is a short opportunity, and here it is a long opportunity. And both resulted as profits. So that means our demand and supply zones are working perfectly even in the indices. This is the international indices, NASDAQ, the US markets indices. Even in Indian market, Nifty also. See, here we have a large candle as a leg in, you have a medium size candle, then large candle as a leg out, but this is a rally candle leg out, so this is a demand zone. See, after that it prices entered and again it pushed the prices up until where it pushed to supply zone. See, here we have a we have a large candle as a leg in, we have one base candle, again we have a large candle as a supply zone. This is a drop candle, so supply zone. So let us draw that zone. Here you got the entry, and then prices moved up and reached the supply zone. And supply zone, then prices entered, it is pushing the market down and prices are coming down. So indices also, our concept is working very well. But the main goal is you should understand in all the markets these demand zones and supply zones. We can identify, and the demand zones are in any market, demand zones are having institutional pending buy orders and supply zones are having institutional pending sell orders. When prices are entering into the demand zone, pushing the market up. When prices are entering into the supply zone, pulling that prices into down. Pushing the prices into the down. So that is what we observed in all the markets. In crypto market, commodity market, Forex market, in any indices, maybe Indian national or international. Everywhere we are seeing the concept is working the same way. That's why supply demand zones can be used in any market. So that is what you should understand from these examples. Hope now you all understand any zone is having a leg in, base candles and then leg out. The leg out could be a rally or drop, large candles. If it is a large rally candle, we call it as a demand zone. If it is a large drop candle, the leg out is a large drop candle, we are calling it as a supply zone. But the only rules are, before this rally or drop large candles, we should have base candles. Before that, we should have a leg-in candle. If these three conditions are satisfied, then we are calling them as a zones, either demand zone or supply zone. Hope these examples are good enough to understand these concepts and all the components of a zone in a better way. I hope you all enjoyed the session. Let us all meet again in our next video. Thank you.